a frat boy into a kiddie pool, sending the price crashing and leveraged traders straight to the morgue. Michael Saylor's strategy answered by buying another 3,000 Bitcoin of their own, because nothing says sound corporate strategy quite like turning your shareholders into a perpetual ATM machine. And Elon Musk is denying reports he's ditching his pro-Bitcoin America party, because apparently the only thing that hates more than fiat is the Wall Street Journal. All that and more right now. Let's go! Good morning, my crypto contrarians, and welcome back to your daily dose of Bitcoin bedlam right here on the Blockchain Report. I'm your host, Hank Hudson, coming to you live from the Bay Area, where working remote usually means posting on Slack once and then disappearing into a 4-hour hike, or so I'm told. So yes, it is Monday, and before we cannonball into today's market mayhem, let's do the ritual. Smash that like button the way you smash close tab when your boss walks by mid-crypto meme binge. And don't forget to follow RoxomTV and yours truly at Hank at RoxomTV, where we serve charts, chaos, and a little bit of comedy, all without making you verify with the driver's license selfie. Now, before we go and nosedive into today's top stories, let's first take a peek at how the numbers are looking in this morning's market rundown. Roll the stinger. Let's go. All right, it's Monday morning. Let's see if the weekend has brought some good tidings to us in the form of big numbers in the market, and it has not really done that. But that's okay. Let's take a look at the updated numbers as of right now. Currently, Bitcoin sitting right in the mid 112K arena. There was a big sell-off this weekend that saw us come cratering back after creeping up on some gains we made at the end of last week, but we are now back at the 112K mark, and we'll be talking more about that in just a bit with our special guest today, so make sure you stay tuned. Ethereum faring a little bit better, currently right beneath that $4,600 level. It did creep up this past week or so, made some new all-time highs, but just barely, never quite hit that $4,900 mark. But Ethereum sitting pretty right now, currently right above below 4,600. XRP currently sitting at about $294, $295 a coin. Cardano down nearly 5% in the last 24 hours. Right now at about 86, 87 cents a pop. And last but not least, we got Dogecoin doing what it does best, cratering. It's down nearly 6.5% itself today, right around that 21, 22 cents mark. Let's see how TradFi is looking this morning in the old stonk market. And it's a mixed bag. Right now, the Dow Jones is down 0.5%. The NASDAQ Composite's up about 46 bucks. And the S&P 5 is down about $5. So not a lot of big movement there. MicroStrategy/strategy is down almost 3.5 percentage points this morning, however, though, but not a lot of big movement otherwise. All right, we got a lot of show for you today, and we're going to come back with that and more in just a bit, but we're going to return to you first after this quick break. We'll see you in just a sec. Stay tuned.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, welcome back to the Blockchain Report. Now it's time to go over the top stories of the morning in our bull run, so let's get to it. We got a lot to cover today. So over the weekend, Bitcoin found out the hard way that when one whale sneezes, the entire market, well, tends to catch pneumonia. Forget complicated macro theories, Powell's speeches, or deep-fed tea leaf reading. The real culprit here, one single whale who decided Sunday was the perfect day to dump 24,000 Bitcoin. That's roughly $2.7 billion worth. And the result was pure chaos. Bitcoin fell from 114 to 112K in a matter of 9 minutes. Weekend thin liquidity turned that sell button into an absolute bazooka, triggering about $623 million in liquidations. because apparently nothing says weekend vibes like $500 million in blown up longs. And if you're wondering where the money went, reports suggest the same whale was happily rotating billions out of Bitcoin and into Ether. Yes, the whale pulled the old sell Bitcoin and lever up on Ethereum trick, and for a hot minute, it worked. While Bitcoin was face planting to 111K range, its lowest since early in July. Yeah, I didn't like it either, guys. Ether was having the best weekend of its life. Ethereum ripped past its 2021 highs and shamelessly flirted with the $5,000 mark. Its market cap pushed towards $600 billion, reminding Bitcoin that sometimes little bro gets the headlines. But make no mistake here, gang, Bitcoin is still the gravity center here. This entire market drama wasn't caused by a faceless crowd, macro policy, or retail panic. It was one whale with a heavy hand and an Ethereum fetish and a Sunday afternoon to kill. We'll talk more about that in just a bit. In other news, Strategy and Metaplanet are in a full-blown arms race to see who can pile Bitcoin onto their balance sheet faster without breaking their buy buttons. Let's start with Strategy. Today, they announced another 3,081 Bitcoin purchase worth almost $357 million at an average price of $115K per coin. That brings their total stash to a jaw-dropping, can I hit the drum roll please? Strategy's total stash is now worth 632,457 Bitcoin. And for those of you keeping score at home, that's nearly $70 billion worth of BTC at today's prices. Now, their cost basis is about $73K per coin, meaning they're sitting on roughly $23.5 billion in unrealized gains. That's not savings account money, that's I could buy Luxembourg money. Love that money. And how are they paying for all this, you're probably asking? Well, by treating their shareholders like an ATM. You see, last week, Strategy raised over $357 million by dumping common shares and various flavors of perpetual preferred stocks onto the market. We're talking 875,000 shares of common stock for almost $310 million. Wall Street analysts are bizarrely into it. Some are calling the issuance accretive and praising their relatively modest debt profile. Or in other words, Michael Saylor figured out how to sell stock at a premium, buy Bitcoin, and call it genius. Now, over the weekend, Saylor even posted on X, Bitcoin is on sale, with a graphic of the company's holdings. Here it is, take a look. Now you can see all the little orange dots there, all the many, many a times he has chosen to buy Bitcoin along the way. He also tweeted this, calling himself Mr. Orange, because if there's one thing he can't resist, it's a chance to meme his way into another $1 billion of Bitcoin. Now, and despite all of this cheerleading, MicroStrategy fell to its lowest close since April last week before getting a nice little bounce toward the end of the week. Investors still can't decide if the premium to NAV is brilliance or a slow motion train wreck. Supporters say the premium is a feature, not a bug, because it gives Strategy cheap capital to buy even more Bitcoin. Critics, however, say that it's a glorified Ponzi scheme. Either way, after this latest purchase, Strategy now controls nearly 3% of Bitcoin's 21 million supply. And if they keep going, Saylor is going to need a bigger vault or his own country. But let's hop over to Japan here for a hot second, where Metaplanet has been quietly running the exact same playbook, just on a smaller scale. They recently added 103 more Bitcoin for about $12 million to their stack. That brings their total holdings to almost 19,000 BTC, worth about $2 billion, which officially puts them in 7th place worldwide among corporate Bitcoin holders, which ain't too bad for a company that only started its Bitcoin treasury operations in April of 2024. Now, unlike the flashy one-off buys, Metaplanet's strategy is slow and steady stacking. They've made Bitcoin a core pillar of their business. Every quarter, they trot out new metrics like BTC yield and BTC gain to show shareholders how this strategy is supposedly boosting value. And to their credit, the financials actually look pretty strong. In Q2 of 2025, Metaplanet's revenue jumped 41% to $8.4 million. Metaplanet has also been busy in capital markets. They redeemed parts of their 19th bond series in July, paying for it with proceeds from stock acquisition rights. Then they went on a share exercise bender. 9 million shares on 14.9 million in mid-August and another 14.9 million on August 20th. Now, dilution, thy name is stacking sats. And while Wall Street, or Tokyo Street in this case, well, they noticed. Metaplanet got upgraded from small cap to mid cap in the FTSE Japan Index in August, and they even snagged a spot in the FTSE All World Index. So now they're not just a Bitcoin treasury company, they're an index fund Bitcoin treasury company. Now, between the strategy's all-in, all-the-time model and Metaplanet's steady sushi-size stacking, the message here is quite clear. Corporate treasuries aren't dabbling anymore. They're turning Bitcoin into the backbone of their balance sheets. And if this keeps up, pretty soon the biggest holders of Bitcoin won't be miners or whales, it'll be listed corporations with stock tickers and quarterly earnings calls, which is great for adoption and absolutely terrifying for anyone who thought Bitcoin was supposed to be decentralized. And Bitcoin cycles, as we know, usually run in neat 4-year waves. You get the boom, the bust, the halving, and you repeat. But Trump advisor and Bitcoin advocate David Bailey says that script, well, it might be in the shredder. Bailey argues the next real Bitcoin bear market won't show up for years. But why, you ask? Well, because adoption is shifting from retail FOMO to institutional main course. Governments, central banks, insurance companies, pensions, everyone's showing up to the Bitcoin buffet. Bailey calls it the eternal September of institutional adoption. No more marginal bets. Institutions are flowing in and with size. And here's the kicker. Less than 1% of institutions currently hold Bitcoin, meaning we haven't even started the stampede yet. Bailey says that kind of demand could push Bitcoin toward $1 million per coin. Let's guys, there it is. Hey, Cynthia, you look great. Now, of course, skeptics point out that treasury companies could blow themselves up in the next downturn. If they're over-leveraged and forced to sell, the market, well, could take a bath. Bailey says, sure, some will crash, but the winners will trade at premiums while the losers get discounted into oblivion. Caitlin Long, CEO of Custodia Bank, added a warning saying Wall Street isn't ready for how fast crypto actually moves. Traditional finance is built on slow settlement and safety nets. Crypto settles in real time and doesn't care if your risk officer is out golfing. But for now, most analysts agree this bull run is still very much on. Investor Lynn notes that bull cycles last about 4 years, and we're only in 2.5 years into the most current one. Dan Tapiro also chimed in, saying 82% of investors surveyed by Morgan Stanley don't own any crypto yet, which means we haven't even scratched the surface of mainstream adoption. Now, Tapiro predicts that 2026 will be the boom year, and that even current holders who own smaller positions than in 2022, which leaves plenty of room for growth in the upcoming year. So yeah, risks certainly remain, but the overall signal is quite clear. Bitcoin isn't finished. In fact, the real fireworks may still be ahead. And the U.S. agency, the Commodity Futures and Trading Commission, the CFTC, is apparently doing cardio again, launching its second crypto sprint. This one is focused on stakeholder engagement, which means they want public input on how they can regulate spot crypto trading without looking like they're regulating it blindfolded. Acting Chair Carolyn Pham said earlier this week the feedback will help them consider issues like leveraged margins or financed retail trading on CFTC-registered exchanges, which is bureaucratic speak for please explain to us what Binance already knows. Now, all this ties back to Trump's promise to win on crypto. His administration is calling it a new dawn for crypto and wants market participants to seize the opportunity to join what they're branding as the golden age of innovation. Now, the CFTC is inviting feedback and suggestions until October 20th of this year because nothing screams urgency like a 60-day comment window, right? Now, earlier this month, the agency launched its first crypto sprint to explore how spot crypto contracts might trade on CFTC-registered futures exchanges. That sprint happened about a week after the Trump White House published its 166-page crypto policy report. Yeah, 166 pages of bedtime reading nobody is ever going to get through. Now, the president's working group gave the CFTC 18 recommendations. 2 were directly their responsibility. 1, provide clear guidance in how cryptocurrencies qualify as commodities. how DeFi projects can comply with registration requirements, and which activities regulated entities can actually touch without getting sued. Now the other, amend rules to accommodate blockchain-based derivatives. The other 16, those are the group projects with the SEC and Treasury, and we all know group projects end with one person doing all the work and everyone else showing up at the end to sign their name and take credit. Now, the CFTC first sprint statement promised to work with the SEC to create a rulemaking process and to use their existing authorities to provide fulsome regulatory clarity. Or in other words, they're promising to finally define the thing they've been regulating for 10 years now. Meanwhile, Trump's nominee for CFTC chair, Brian Quintez, is still in limbo. The White House itself postponed his Senate vote in late July. Crypto advocacy groups are now begging for his confirmation, saying a permanent chair is absolutely critical for the CFTC to achieve its crypto goals. But the agency is running a little short-staffed. The CFTC is down to 2 people. One of them on the way out, pretending to sprint through an 18-part crypto to-do list while their future chair is stuck in Senate purgatory. And somehow this circus is supposed to deliver regulatory clarity. Good luck with all that. All right, we're taking a quick break. When we're back, we got more of today's top stories, and shortly we'll be joined by none other than Mr. Big Beat himself, Stephen Orr, to react and read the markets and tell you what you can be expecting next. Stay tuned. A lot more Blockchain Report underway after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, everyone, welcome back to the show. It's time for our weekly market check with Mr. Big Beat himself, Stephen Orr. Stephen, thanks for joining us this morning. How are you, my friend? Happy Monday.
Look, I think everybody's screaming bloody murder out there. Oh my God, some big whale sold 24,000, moved Bitcoin into Ethereum. I've heard everything in the world. I don't care. Look, the guy, okay, look, if that's what's happening, I understand that. Everybody has the right to take a profit or move their money around. The problem that we saw here, and I've said this in your show a couple of times, was the manipulation side of this. I didn't like that. It was the front running, right? We saw that a lot of these 24,000 Bitcoin are being moved, and a lot of people took advantage of that, and they 100x it, 50x it, and what the problem with the people don't see right now is it's still low volume. It still wasn't even that much. It wasn't even a big move. We've seen this many times, especially if you're OGs like us. We've seen this game over and over. I've seen this movie, I've heard this record, and I played that CD. The problem is nothing has changed. The narrative is still the same, and we're going to go back up. I'm going to show you my chart here in a second, exactly what I've seen in the market and why this is not a big deal. I've got up a daily chart right here, Hank, and you can see we tested right back here so far back there, back on the 2nd and the 4th. We go back, we've tested it again on July the 7th. We haven't gone back that far. It's not like we're going to go test back years and years and years. It's only a month ago or 3 weeks ago. And we did it twice. You'll notice down here we did it once and twice, and actually did it a 3rd time, and we didn't really care about it. So here you go. There's where you tested. 110.5. We knew that's where the liquidity was. We were there. Don't worry. Guess what I've been saying to do? Buy the freaking dips, because that's what's happening right now. We've seen it again, and again. And when I saw the second time, the difference is, look at this low volume. 1, 2, 3. 3 days of extremely low volume. They took advantage of that. Great. It was over the weekend. We know that game too. We know back from the early days, we know how it's played. And when I see low volume, so there's another low volume, all right, they took advantage of low volume, and guess what we do? We take advantage of it and we buy. And you'll see that big green candle when the volume does go back up, so do we. And that means the accumulation. And that's where you're going to see these Michael Saylors of the world starting to accumulate. The institutions will start to buy, and they won't care. Over the weekend, Hank, I saw a couple of tweets. I'll say a couple because I want to be nice about it. A lot of tweets, people saying, oh, well, the reason that we saw the price go down is because there's more selling than there was buying. When I see that, my eyes roll up, my heart starts palpitating, and I get, I don't know, lesions on my behind. I don't know what goes on here. It's crazy. It's not true, right? Wherever there's a buy, there's a sell. There has to be a market maker, right? There's always a buyer, there's always a seller. The question mark is, where are the buyers and where are the sellers? So as they start to dump or as they start to accumulate, there has to be a buyer, there has to be a seller. That's what makes a market. It's mechanical, right? It's not, oh, there's more sellers. Yeah, there's a lot of selling because the buyers aren't willing to buy it where you're at. So they have to lower the price, and that's what pushes the price down because there's an overabundance of it, right? So I'm not seeing that. I'm not seeing where the overabundance is changing the narrative here because there's not. Right? We know how much the Bitcoin there is on the exchanges. And guess what's happening right now? Right back up. We tested 110.5, and guess what? We're already up 2,000 points since then. That is against the dollar. But it's still one Satoshi is still one Satoshi. One Bitcoin is still one Bitcoin. So if we're looking at this from all the different perspectives, we've not seen much of a change. I think we go back on the US dollar. We're going to go test 106.8. I think we go blow right through that. And where am I going to do that? If you look at the last time we saw this, look at this. Look at that from July. In 3 days, this is what happened, the 3 day sell-off. We've had what? The 3 day sell-off. We're going to go back and test right up there, 106. And guess what happened the last time we did that? It blew right through the numbers and went right back up. That's why I'm saying we're going to go back to 124, 125, 126. And it'll probably happen within the month. I know, I get it. Everybody's gonna say, "Oh, but September and October is a rough month." Okay, so that's November, December. Who cares, right? If your time frame is changing, then that's a different situation. But I'm not seeing that. I'm also seeing MACD. The MACD is also turning. Now I'm gonna pull up what a three-hour chart. Why a 3 hour chart? Because that's what Wall Street uses. All right. Why is Wall Street a big deal? Because the institutions are the ones looking at these charts. We've already seen this already turn. The MACD has already turned. You're already seeing RSI about to cross over. We're going to test probably the 113 handle here, probably within the day, and probably probably by the end of the day, U.S. time, Eastern time, probably test 114.5. We may even do this today. So we're going to see some serious buying. Okay, if it doesn't do that big beat, then what do I do? Well, we may wait it out a little bit. But you see every time on those 3 hour charts, when it turns, it not only turns and gets back to where we lost, but it also goes above. It not only turns, it goes back to where it lost. So here we go again. We're going to turn, and guess what? We're probably going to go right back to that 114.4 handle here. We've seen it time and time and time again. We lost. Guess what? It tested. We lost. Guess what? It made new highs. Guess what? It lost. Guess what? It tested. It made new highs. We're going to see that again. And we've seen it over and over and over again. Now I want to pull up a monthly chart so we understand just where we are in the whole cycle of this whole thing. Here it is.
Oh, yeah.
All right. Hopefully you can see this chart a little bit better. I'm going to pull it up. We're going in one direction. One direction, straight up. So when that curve turned right back up, it tested, and we did test. We did test. There it is, 111.7. We blew through that, got to the 110.5, and now we turn around, and now we keep on going up. There is nothing stopping the miner. We're still going higher. We're still going higher, and the volume has dropped a little bit. That is literally the only thing that's scaring me right now is the volume, and we know that, and yet on the daily chart and on the 1 hour chart. Now, if you're a 1 hour chart trader, great. You're very happy today because you've turned and you knew when to buy. Right down there, that 110.5 handle, 110.6. You knew that they didn't get all the way to 110.5 because they knew there was a bunch of buy orders down there. Oop, guess what? The institution stepped in. So here we go. Now, I'm looking for this God candle to hit, and when it does, it's going to blow through all the numbers. So that's what I'm seeing right now, Hank. I don't really see much more than that in the markets. I know a lot of people have been asking me about Ethereum. I'm going to go right to Ethereum. Oh, but that's why we sold our Bitcoin to buy Ethereum. Oops, guess not. Went to 5,000 and now here we do. I like Ethereum. Okay, big time. Guess what? I'm going to look at the Solana. Solana's even bigger. Oopsie, right? Okay, so we sold our Bitcoin. The whales bought Solana. Guess what? The people that were already in Solana and Ethereum took advantage of that buy, and they took right off those whales. And guess what? 212 to 196. Now I don't see, look at there. Now I don't see the volume coming back in. I don't see the volume coming back into Solana here either. I do see the technical side of this changing. So if you're looking to buy here, this is not a bad technical spot, but I'm not seeing the volume in order to make this thing fly higher. All right, so guess what? Does that mean alt season is here? Is it still alt winter? Is it? I don't care, right? Depending on what the use case is of that altcoin, that's what I'm looking for, right? I'm looking for a use case. Are the meme coins going to be hot going into the holidays? Probably not. Is the use case for Ethereum there? Yeah, I think it is. So if we go back to Ethereum, all right, here we go. So here's the Ethereum, but I don't see it. I do see RSI here, and I do see MACD turning a little bit, but the volume is a little bit lower. So what is it that I'm actually looking at? What is it that I actually want to see? If I'm looking at this from a perspective of the Dixie, the dollar, right? I'm going to pull up the dollar. This is what I see. If you're looking to protect yourself, a hedge, right? You're a big institution. Guess what? We need to see this Dixie dollar continue to get slammed down the downside. If the dollar pushes up, that hurts the Bitcoin, right? All right. So let's see what it's really doing. So what's another country that buys Bitcoin? We know it's Japan. All right, so the dollar versus the yen is at 147 and 54 basis points, right? So here we go. What we need to look for here is, I love Tokyo, I love sushi, and I love Akihabara district in Tokyo. I can't wait to go back. Why? But I guess not, because why? The dollar is not as strong against the yen as it had been in the past. Back in mid 2024 in the summer, we saw, look, right, 162 when I was there last, 158. We're not seeing that. We're seeing lower highs against the dollar. So the dollar strength is not strengthening, it's weakening. That is better for what? Bitcoin. So that's why I'm saying that right here. I like this. I like this move. The technical side are pushing to it. I think the volume is giving us a better answer. And I think the dollar is also helping us against the fiats. So all those pieces right there, the puzzle, are helping the Bitcoin, not Ethereum, not Solana, not Aave, not Chainlink. I understand the stories behind them. But if you're a Bitcoin maxi, and I'm definitely not, this is a Bitcoin story, right? All the pieces of the puzzle, you're looking for it. And I want to hear more about the news side of things. But right now, we know what it did, right? I'm going to pull it right up one more time so everybody sees it and understands it. Right here, we tested not once, but twice. Couldn't do it. Got back to those top resistance lines back behind, and we couldn't do it. So right back up we go. And guess what? This God candle is going to tell us right back up. We saw it here too as well. When it couldn't push, boom, right back up. There it is. 105 becomes the Bitcoin's last stronghold. I don't care. 110.5 is where it is for me. It held, and we go right back up.
All right, well, I got a feeling that most of what you said was music to Bitcoiners' ears everywhere this morning, Big B, because I know a lot of people were fearing that pullback, but to you, it sounds like right now this was less of a serious market signal and more so of just one rich guy playing Watch Me Ruin Everyone's Sunday, and that's why we're seeing this drop back right now. But based on what you're telling me here, it sounds like we've got a pretty solid floor around that 110.5 level. Is that accurate?
Yeah, you know what's the best part about that was is that when I saw that over the Sunday night, I'm like, oh, okay, another Sunday night nuttiness. It didn't scare me, right? What did I do? I bought the dip, as I've been saying, right? And guess what? If you bought the dip here again, I'm not telling people to go buy the knives. Don't buy knives. Knives get cut, right? I'm telling you, look for those specific areas that we showed you, right? 110.5. You saw that right on the charts, and it did it not once but twice. So if you're nervous about things and it can't break through those numbers, and now you're hearing 105, okay. If it does, guess what? Then another buy opportunity. Now you've had two buy opportunities. I don't like it, Hank, when people say, I don't know when to buy. I don't know when to put my hard-earned money to work. Or I don't know, Bitcoin's expensive right now. Is it? I mean, not that long ago, just a few weeks ago, it was 124, right? Last week on the show was 116, right? It's slowing up. The sales are slowing up. The buyers are stepping back in. And you're seeing the sellers not get so anxious right now. I want to see a little bit on Friday as options start to burn off on this. I want to see a little bit more ETF flows coming in, because that's where a lot of the money is coming into right now. But right now, I'm not scared, Hank. And if you're scared, you shouldn't be in this market anyway. What is it Warren Buffett says? If you can't handle a 10% drop, you shouldn't be in that equity, right? So this is a good example of that. This is more volatile equity than stocks, right? And if you can't handle that, get out of the kitchen. This is nothing for those OGs of us. This is we call this a Sunday night. So I'm not too worried about it, Hank. Now I'll tell you what I would be worried about. If all of the OGs start selling at the same time, right? If they all start dumping their coins, and that's not happening, right? They don't want to ruin the markets. They're the ones that created it. So let's look at the future a little bit, and let's widen that chart out that you've got on your desk, and think about it. Now, I put my AI to work over the weekend, right? And so one of the things that I found out was that the nervousness coming into this is not nervousness from a specific thing. We saw something that we've been asking for, especially those of us on Wall Street, have been asking for a cut. So we started to see Powell change the narrative. It's the very thing that I've been talking about for 6 months. Change the narrative. The problem I'm seeing, Hank, now is if the narrative gets too strong for them and they start to really cut, be careful what you wish for. If we get a nice, easy cut once every meeting or once every other meeting, that'd be even better. Then we see a general direction, and now we're starting to spur the economy again. You're also seeing people not really wanting to invest in Bitcoin and ETFs. Why? Because they might be thinking about buying a home, and they need to shore up some of those investments and start to understand cash positions so that they can do that. Now, if rates start to come down, okay, then they're thinking about that. Oh no, big beat. They're not putting their Bitcoin to work to buy a house. Yes, they are. Actually, they most definitely are, right? If they're not putting to work in something, they're looking to invest in something. Meaning, if they're not looking to invest in Bitcoin or Ethereum or Solana right now, they got to buy some massive asset. And sometimes that asset becomes bigger than they are, meaning that they're looking down the road even further. If those people that are looking to buy a home is looking at a 30-year mortgage, we call a jumbo mortgage, then guess what? That should be your time frame for Bitcoin. It's pretty simple. If your time frame for a house is 15 years and you're looking to buy a new home, guess what? It's the same situation here. So think about 15 years. So if you buy a house, you're borrowing money, you know that your rates are low, borrow that money and buy the house. But if your mortgage is X amount, let's say it's $1,000 to $2,000 a month, great. Take a percentage of that. 10%, because that's what most people don't realize this. When you buy a house, you're paying for those rates. You're paying for the banks up front. You don't pay it in the back end. The back end is when you finally pay off your house. Guess what you do? Pay for it forward, and that's going into an asset that's appreciating, and that's Bitcoin. So I say, if you're going to buy the home and you're waiting on those rates to come down, great. Also put some money away into crypto as well.
Yeah, that makes a lot of sense. And you brought up a really interesting point that I can't say I've heard a lot of people speak to right now. And it's that when we hear about these lower rates that we're expecting Jerome Powell to finally act on here in the last couple of months of the year, people think, well, lower rates, more money into liquidity into risk on assets like Bitcoin, right? But they also don't think, and you just brought up this point here, lower rates mean people are more willing to put money down to buy things like houses and things like that. So there might be an allocation away from Bitcoin as people put these into other assets like real estate, for instance. So I know your platform, Quasar Markets, is great at taking all of these different variables into account. Can you tell us a little bit about that and what are some of those things we should be looking for as these rate cuts seem to be, pretty imminent here?
Yeah, that's a great question. One of the things, and I think I'm going to coin the term here on your show, I'm going to call it stayflation. We've got a slight problem going on in the markets, and it's unemployment. And we heard Powell talk about this, and I've been talking about it for over a year. The problem that we're seeing in the job market is that, and of course now we've seen tariffs is causing a problem, and we're now seeing that unemployment is now becoming a problem. And there's a reason why we're lowering rates. We're lowering rates because of those very things that Powell talks about. Got to get down to 2% inflation, which we're not. Got to get down to unemployment's a problem. But people aren't leaving their jobs, and employers are getting very nervous, right? So we're having this thing where we're getting older in the position. Okay. And the graduates aren't really moving into these positions because of AI. So they're not really replacing the older people. And what we're seeing is the employers themselves are paying up to keep that employer in that position. Now, the question, and I'm going to call it stayflation because the employer is making you stay. So there's an inflation coming into the machine already because when you hire a new person, a college graduate, they're cheaper. So that inflation is coming in. So I'm calling it stayflation. All right. So when I look at that perspective, right, that means that a younger person is not buying the home because they don't have the job yet. And as the rates come down, they're getting very itsy bitsy because they're not happy. They want to make some money. They want to get a job so that they can actually go and buy the home, and they're looking to buy a starter home. The other problem with stayflation is the people that are in their homes aren't leaving because they can't get another home. Okay, so there is causing this massive problem. So if they're not moving money around, then where are you going to put it? Back in something that is going to inflate in price. Bitcoin. It's not hard. This is not, this is just math 101. This isn't hard math. Now, if you want a PhD level of math, and you want me to explain to you and of course I understand advanced calculus in my head, let's talk about that. Let's go deeper about these numbers. Let's go to PhD level of why Bitcoin is going to go higher and not just saying that there's this finite number. All right, let's break this down into a real easy piece. When you look at the miners and when they are breaking down these massive blockchain numbers to get the break off, right? They are going at it at an exponential number, right? They're having to speed up their mining. Inflation is happening in electricity because it's costing more money, right? And a lot of these miners are sitting next to these burned off natural gas, or they're sitting next to these electric grids that makes it a lot easier for them working. And Texas is a good example of that. All right, the calculus side of this. So the miners are mining faster. Electricity prices are not going down. We know that around the country, the electricity prices are going up, especially where I'm at in Florida here. We know that there is a finite number of Bitcoin. We know that these OGs are now dumping a little bit. 24,000 Bitcoin is one last dump in here. We know that there's also a finite number that we can put into the exchanges at any one time. There's just not enough Bitcoin. The holders are holding it on their cold wallets a lot harder, longer than we had in the past. So all of a sudden, if we added those numbers up, Moore's law is not keeping up with us. So Moore's law says that as you know, we're going to double in technology, you know, every 6 months or a year, and that's speeding up. So we're actually passing up Moore's law. All right, so I'm going to add Moore's law to that equation. And then on top of all of that, I'm going to multiply it because we know that we have an administration that is very, very, very favorable to crypto. So all of those things adding up does not add up to a sell-off or a crash in Bitcoin. None of those things add up. So if I were to add, and one more part of that equation is the inflation issue that we now know is under control. So if all of those things, and we know that because Powell is lowering rates, so we're giving the miners the ability to borrow money to make more mining machines. We're giving electric companies ability to borrow more money to produce more electricity. We're giving, you got it, right. We're not slowing down. We're going and speeding up. And that's and I can put that into a calculus formula for you, and I'm going to call it the big beat formula. But right now, I'm not too scared about this. I like this, and I think we go higher. I think we test 125, 126 by the end of November, if not sooner.
Yeah, no, I'm loving to hear about it. Now that I do that mental gymnastics in my head, carry the one cosine, you're right. That all adds up perfectly as far as I can tell. No, I know we got to let you out of here in just a few here, Big Beat. But before we do, I want to zoom out really quick and look at the entire weekend we just went through. The whale dump, the liquidations, the Ethereum rally. Then Michael Saylor says, oh, what the hell, and he buys another 3,000 Bitcoin on top of it. What do you feel like is the big takeaway for traders right now based on what we saw in the past weekend here, the past 48, 56 hours, whatever?
I think the very basics of trading still needs to be put in place. One of the things that I watched over the weekend is liquidations and people crying about, oh my God, I got wiped out in one weekend. Well, the very basics of trading still needs to be applied to how we trade, even in the crypto. So you better have those stop limits in as you are trading. So if you're not accumulating like most of us are, buying and buying and buying and accumulating, and you are actually trading. So to keep yourself from crying all over Twitter, right? To keep you complaining about it on Facebook, and I don't want to hear it, put those stop limits in. If you know what your risk liquidation is, you know what your risk is, then your reward, set that priority. So if you're in here now at 112.5 and you know that the last time we tested was 110.5, you better have your stop limits in at 110.5. And as you are making money and as your count goes up, you might want to have a trailing stop in there. If you don't know what a trailing stop is, then probably I'll teach you, but you should learn. But this is what I mean in your order book. So you know that we're at 112.4 right now, 112.5. If you think that you're happy here, you know where the last sellings were. We're right at 110.5. That's where they tested. They got to 110.6. So put your stop limit in. That's the things you didn't see over the weekend. People were just getting, crying all over Twitter, crying all over Facebook because they didn't understand the basics or they weren't willing to protect themselves. And that's what I mean by trading. Now, if you're like me and you and we're the OGs and we're going to go long and we're staying and we're accumulating, great. But if you're not, you're trading, don't be stupid. I don't want to hear it on Facebook. Don't want to hear it on Twitter. I want to hear you smiling because you went long with Big Beat and Hank on the Blockchain Report.
No, those are wide words. And as our resident chart shark always says, he always says, plan the trade, don't trade the plan. And having a plan comes with having an education and a background in doing the research. And before we let you go, I know your platform, Quasar Markets, allows us little fish, the minnows out there, to actually swim with all of these whales moving the markets by providing that type of information. And I'm sure there's plenty of people in our audience this morning that would love to learn more about Quasar Markets and how you can help them be better traders and get where they can go to get your amazing hot takes that we see all the time. So let us know where we can find those, Stephen.
Yeah, that's a great question, Hank. Thanks for, Quasar Markets. We call it Quasar Markets Magic. This morning I was looking at AI and I said, okay, show me something that I don't know. I've been doing this for a very long time, right? I found South Korea. Their inflation is starting to creep up again. So guess what they're going to do? They're probably going to raise rates. So all those people are going to put their money somewhere. They're going to probably put it in Bitcoin, right? So that's the kind of stuff that we do. Click on the button, quasarmarkets.com. All you got to do is get started free. You get a 7-day free trial account, and I'll probably give it to you longer if you say, hey, I saw you on Hank's show on the Blockchain Report. I'll probably give a month away. How about that, Hank?
You know, it's really one of the only places on the web for everybody to really get that full 360 view of our financial system at play. So we really thank you for sharing that with us and all the people out there. You're doing God's work, Stephen, and we always appreciate having you with us on the Blockchain Report and sharing us your biggest beats, as we know you're the man with the plan and the info. So thank you for joining us today, Stephen. It's always a pleasure.
Thanks, Hank. I'll see you back next week.
See you next time. All right, we're going to break here at the Blockchain Report, but when we're back, we're going to be joined by our big return guest of the day, Brandon Gentile, to talk shop. So stay tuned, all that and more, coming right back after this. All right, welcome back to the Blockchain Report. It's time to see what's going on in other parts of the world with our Blockchain Without Borders segment. So let's get to it. Because once upon a time, Bitcoin treasuries were the weird kid at the corporate finance lunch table. But now they're basically the prom king. Modeled after Strategy's obsession with turning balance sheets into Bitcoin vending machines, these companies are piling coins like hoarders on a Costco run. And Asia, which used to look politely interested from a distance, is suddenly going full cosplay. In just the first half of 2025, the number of public companies holding Bitcoin doubled from 70 to 134. That's over 244,000 BTC shoved into corporate vaults in just 6 months' time. Now, 8 Japanese companies alone have joined the craze, proving Japan doesn't just do anime sequels, it also does Bitcoin balance sheet sequels. Case in point, Libwork. Yeah, that's the Japanese construction company that builds houses, but is now also building a Bitcoin treasury of its own. Earlier last week, its board approved a 500 million yen purchase. That's roughly $3.5 million worth of Bitcoin in American dollars. Libwork says it will buy gradually between September and December through a trusted exchange, all while calling Bitcoin digital gold. Because holding only cash, according to them, is like showing up to a knife fight with a balloon animal. But here's the kicker. Libwork is also working on a 3D printer house NFT project. Yeah, they're turning architectural blueprints into NFTs, issuing ownership certificates tied to actual homes. So if you thought NFTs were dead, Japan's construction industry is here to bring them back, one blockchain bungalow at a time. Hooray. Now, meanwhile, back at the macro level, the Trumps once again are involved with things, as American Bitcoin, a U.S. miner backed by Donald Trump and Eric Trump, Donald Trump Jr., I should say, is sniffing around Japan and Hong Kong to build local strategy-style treasury firms. Because apparently no global financial trend is complete without some Trump branding slapped onto the side. Libwork's experiment is especially telling. It shows how Japanese companies are framing Bitcoin as a defensive hedge against inflation while still layering in innovation projects like NFT houses. Some firms like Metaplanet and Remix Point, well, they're doubling down. Others, like Value Creation, are tapping out completely. All of it highlights the bigger risk here. Asia's treasury boom could fuel the next leg of Bitcoin's price run. So we'll stay tuned for that. Also, and going on in Asia, North Korea's Lazarus Group is at it again because they just can't stop themselves, can they? This time, they're accused of swiping $23 million in Bitcoin and ETH from a UK-registered exchange called Lika. Yes, Lika, which sounds less like a trading platform and more like an off-brand IKEA lamp. Now, the hack hit so hard that Lika froze trading, shut down by December of 2023, and then got liquidated in court this past March. Now, OFSI, that's the UK's Office of Financial Sanctions Implementation, because of course they needed the longest name possible, pointed the finger at malicious DPRK cyber actors. In other words, North Korea. Israeli researchers at Whitestream also traced the funds and said the Lazarus crew laundered the money through shady mixers and exchanges that treat AML rules like napkin doodles. The stolen cash, by the way, is likely going straight into Pyongyang's nuclear and military budget. Great, because nothing says future of warfare quite like a country funding missiles with your altcoin bag. Not everyone's convinced, though. Some researchers say there's still not enough proof that it was North Korea, which, given their track record, is kind of like saying, we can't prove OJ did it, while he's holding the very glove in court. Now, as for Lika, the company had promised commission-free trading and even managed to lure retail investors. Then came the hack, the freeze, and the shutdown. By March of 2025, more than 70 angry customers sued after losing about 5.7 million euro at a UK court, until a UK court finally ordered liquidation, and Interpath Advisory stepped in to clean up the whole financial carnage. Now, to add insult to injury, Lika's founder, Richard Olson, was declared bankrupt in January and is now being investigated in Switzerland. Fun fact, though, the UK's Financial Conduct Authority had already flagged Lika back in 2023 for not being licensed to serve British customers, but retail investors ignored the red flag because, hey, commission-free trading, what could possibly go wrong there? All right, welcome back to the Blockchain Report. It's time for more of this morning's bull run. Sorry about the little delay there for a second. We just had that story about the Lazarus Group, and then all of a sudden our systems crash, and I don't want to say they're related, but I don't want to say that they're not either. All right, before we get into the thick of it, we actually want to welcome our second special guest of the day. This gentleman is a former pro hockey player turned full-time Bitcoin advocate, educator, and podcaster, and he's got a knack for cutting through the noise with raw, unapologetic truth about money, freedom, and sovereignty. You know him from the Playable Character Show and his tireless work in the Bitcoin community. So let's give a big Blockchain Report welcome back to the show, Brandon Gentile. Brandon, welcome back. It's great to have you. Our audience certainly hasn't forgotten you, and neither have we. How are you this morning? Good to have you back.
Hank, team, yeah, thanks, guys. This is always a blast being on here, and I can't wait to chop it up with you guys.
Can't wait either. But before we get into it, Brandon, for those in our audience that may have missed you on your first appearance on the show, can you just share us a little bit about your journey from professional hockey player to the world of Bitcoin and what drives the work that you're up to today?
Yeah, so 15 years ago, I was playing hockey at Michigan State University, and I was very involved politically, and realized during the great financial crisis that it was not red versus blue, it's a state versus you. And it led me down the road of reading Creature from Jekyll Island, studying monetary history, and just, you're at that age, 22 years old, leaving school, and you're like, I need to learn how to make money because we weren't taught in school. So, of course, your real education begins once your formal education ends. So went down those paths, Robert Kiyosaki, Donald Trump books, Mike Maloney books, gold and silver, all these different, like learning what really money truly was. And then you realize very quickly, once you go down those paths, read a few books, there is a game being played on everyone. And it's, long and the short of it is inflation. They, screw you over, print a lot of currency, and they control you, put you in a rat wheel, and you got to pay off all their, principal and interest and taxes and direct taxation or through inflation, the money printing, the currency printing. And that's how you don't have time to do anything else in your life. And you're just spent on the rat wheel running, trying to catch your bills and pay your bills each month. So that was what woke me up to 2010, 2011, just going down the rabbit hole. Started a real estate team right after I retired playing hockey, started getting hurt in the early 2010s and had to really make some hard choices and hung them up, created a real estate organization, did that for 10 years. And then started hearing about Bitcoin in the mid 2010s, and then really started investing during the 2017 bull run. And then it just became very apparent that things were going to go really crazy once 2020 happened. And I realized I needed to fire myself from real estate and get, to really take the chips off the table and say, what, the best thing we can do is defund the entire debt-based fiat monetary system that we have. And there's no better way to do that than buying Bitcoin, selling your dollars, buying Bitcoin, and putting it in self-custody and suffocating the life out of the existing system, jumping off the Titanic, fiat Titanic, onto the Bitcoin life raft. So the last few years has been doing that. I have some books in the works, stuff like that, helping Aladdin Flynn of the Bitcoin trading cards. That team is an unbelievable team, what they're doing. And they're trying to take on Pokemon. Those guys are crazy. And so he's an incredible guy. So I've been helping them. And then obviously the big thing is just doing the podcast, talking to you, talking to anyone I can about Bitcoin and spreading the freedom message to anyone who'll listen.
Yeah, well, we appreciate that summary of your journey and what you've been up to. I certainly consider you one of the best, Bitcoin educators out there in the space. So we're certainly pumped to have you back on the show today to talk shop. And I think we got a lot to talk about of just what happened over this past weekend. So sit tight for a sec. I'm going to recap this story and then we're going to jam about it. Sound good?
Sounds good.
All right, so to recap, over the weekend, one whale dumped over 24,000 Bitcoin, which is about $2.7 billion worth, into thin weekend liquidity. That sell-off sent Bitcoin crashing from 114 to 112K in just 9 minutes, triggering $623 million in liquidations. Meanwhile, Ethereum had the best weekend of its life, ripping past old highs and nearly touching 5K. So this wasn't Powell, it wasn't retail panic, it was one whale with a very heavy sell finger and apparently a bit of a crush on ETH. All right, we're bringing Brandon back. Brandon, when one whale can dump $2.7 billion in Bitcoin and send the price spiraling in a matter of minutes, do you see that as a sign that Bitcoin is still too concentrated in a few hands, or is this just the kind of chaos we should expect until adoption spreads wider?
Yeah, it's a great question. I think it's something that as adoption grows, then this will dampen, obviously, like you said. But I think it's more of a resiliency play and just showing people how resilient Bitcoin is. We had the 80,000, someone selling Galaxy Digital, I believe, a month ago or whatever that was, 2 months ago, and it went down a couple percent. And so to me, you kind of look at it like half glass full. Like, normally for years, people have said, if that happens, or, if the Mt. Gox coins come back on the market or whatever, it's going to, we're going to 5,000 and 1,000 again, 10,000, whatever it was, And so to me, it just shows resiliency and people there ready to gobble up the coin that are coming out of the market when we have obviously huge players in the space now, whether it's just retail itself and people DCAing all the way up to nation states. We haven't had this amount of buying before, and hence why the price is up above 100 grand. I mean, when you think about 15 years about when Laszlo sold the pizza for 10,000 Bitcoin, and or bought the pizza into where we've come now, where it takes over 100,000 US American dollars to buy one Bitcoin. I mean, that's remarkable. And the speed at which, we have to zoom out. And I think that's it's all going one direction. It's all up and to the right. It's a network effect, and it just keeps, it's going to have these little dips and these, dips and the troughs, and it's just part of how this adoption works, and people being educated on the process and what's happening, and that the money, the transition through this monetary system is happening in front of our eyes. In 100 years from now, people look back and say, oh, wow, like, how do you not see that coming? Like, it's very easy in hindsight to look back and read a history book and be like, oh, but when you're living through it, a lot of the times, like these events, like even huge events in life, when you look back, it's very hard to see like on a day-to-day basis. It's not, some like easy thing where someone's like flagging you down and saying, hey, look what's happening, all these. So I think we have to keep that in mind. It just shows the resiliency of the market, I think, at the end of the day. And it's not something to, again, the people who are fighting this 10 years ago or 5 years ago were saying that if this happened, it would go to, 5,000 or 1,000, well, here we are, and it's not. So.
Yeah, that's true. And we saw, like you mentioned earlier, a bigger jump than this only, was it a couple of weeks or months ago? Was it the Galaxy Digital had like 80,000 that were dumped over the weekend? We saw the price fall like $3,000, and then the week started and it clawed back up in a matter of no time. So I do think we are seeing this increased resilience for Bitcoin as we move through this current cycle, especially. With that being said, though, weekend liquidity has always been kind of thin, which makes swings like this usually look a little more violent than they probably are. From your perspective, though, does this hurt Bitcoin's credibility with institutions who want stability? Or is it actually an opportunity for smart money that knows weekends are when the sharks tend to feed?
Yeah, at the end of the day, I mean, Bitcoin is the best asset out there, and people want your Bitcoin. So they're going to do anything and everything, whether it's just, flooding and media, or, trying to do, ridiculous stuff on the weekends, or different trading, or who is it, price suppression, the paper Bitcoin, who knows? But people are doing anything they can to get your Bitcoin. I think that's what everyone has to remember. That's why, I mean, it's like why self-custody is so important to a large extent, because it keeps your emotions at bay. Like, there's not much you can do. You can't just hop on an app and just really quickly and easily sell it. So there's some psychology behind why, not just the freedom aspect, but custodying your own assets and protection, but also just, keeping your human emotions in check. So yeah, to your point though, obviously it will hurt the credibility to a degree. That's why a lot of institutions and bigger players haven't gotten into Bitcoin for years, because it's too volatile, it's this and that. Well, that's going to happen, but it like you said, it gives a huge advantage to the retail, the plebs out there who are looking to get ahead and find themselves on the positive side of this wealth transfer. These are your moments. These are your times. When it's at 1 million, when it's at 10 million, you're going to look back and wish you had $100,000 Bitcoin days, and it only was $100,000. So again, zooming out, that gives you the perspective of really understanding what's truly happening, and not just, being some high time preference person just sitting there and looking at the linear chart on a day-to-day basis. That'll drive you mad.
Yeah, absolutely. And to your point, zooming out, I feel like, is always the move. It's like, take your breath and zoom out and look at the charts. And that comes with doing your own research and educating yourself. And while you can't predict these things, we actually had Mark Moss on the show last week, and something he said, it's kind of like those who are unfamiliar with the history are kind of doomed to repeat it, but those who are unfamiliar with their history are also doomed to not be able to kind of predict what will happen next. And it does seem over time, these types of things kind of seem to show up time and again, just through different forms of the monetary system. So if someone's educating themselves through platforms like yours on YouTube, I think they're going to be a lot more aware and prepared when these types of things happen. Now, one thing that did happen was, while Bitcoin face planted this weekend, ETH sprinted toward 5K. It beat barely new all-time highs, pushed its market cap near 600 billion. Do you think that Ethereum is truly building its own kind of momentum right now? Or was this just one whale rotating into ETH and making Bitcoin look bad for a news cycle?
Boy, oh boy. Yeah, that's a great question. I mean, I know our good friend Noah Bowerly thinks, for years has said ETH needs to become, 1,000 times bigger so that it can take down all of Wall Street. And who knows? Maybe that just might happen. And here we are. So, it's funny. I mean, Tom Lee went on a couple months ago into CNBC or whatever it was, and was, talking about ETH. And here we are. It's, things have been really pumping. So it's interesting. Again, you got to read the tea leaves a little bit, kind of read in between the lines. And this is the beauty of Bitcoin. ETH is there's no one knows what's going on. As a central founder, there's roadmaps and splurges and purges and all kinds of stuff going on. But Bitcoin, the beauty of Bitcoin is no one can take it from you. No one can print more of it. No one can debase you. No one can steal your time and energy. And all you have to do, whether you work at McDonald's or you work at Tim Hortons, or you're a doctor or a lawyer, you just got to save in Bitcoin, save more than you spend each month, and you will become more and more ahead in life as time goes on, which is what every human should be. You shouldn't have to have 180 IQ and be some day trader, high frequency trader and arbitrager to be able to get ahead in life. I really don't think that's how life was designed necessarily to be the case. So that's the beauty of it. And again, the E thing is they're short-term things. It's the whole XRP, it's up 500%, or ETH, well, look, it's up, 3x, 5x in the last month or two. It's like, okay, again, zoom out, and the average guy is going to get wrecked trying to jump in and out of coins and trading things. I mean, very few, if any, people are great traders. That's why there are high-frequency trading algorithms now, because the average person, the average human, most humans cannot do that. You shouldn't be forced to do that. Do what you're good at, and then save in Bitcoin, the hardest money known to man, and don't worry about all the noise.
Yeah, absolutely. And in these short-term instances we see with Bitcoin pullbacks or whatnot, people are like, oh, that's the problem with Bitcoin. But the truth of the matter is there's nothing wrong with Bitcoin. These are all human problems, right? It's that shiny object syndrome. I saw Bitcoin reach all-time highs. I want to carve a little off the top and chase some higher alpha plays with Fartcoin or ETH or Solana or whatever else. But like you've said many times, you pull back and you see that chart. Bitcoin is still up and to the right over the course of its history, despite us humans injecting our problems into it and doing our best we can to wreck it. It doesn't matter. It's resilient. It's the hardest money out there. That's why it's always been up and to the right. So yeah, a lot of good points you made there. Thank you, Brandon. Stay tuned. We're going to sit with you in just a second. I want to go over this next story and we're going to chat about it because Anthony Scaramucci says that Bitcoin will hit 180 to 200K by the end of this year. Yeah, even with the current pullback, the mooch is holding firm on his target, calling it cautious. Speaking at the Wyoming Blockchain Symposium, he said Bitcoin is consolidating while institutions flood on in. 3 years ago, conferences were filled with retail degens and blockchain founders, but today, it's suits and alligators because Wall Street finally realized that Bitcoin doesn't care about their bonus structure. Now, the mooch admitted some larger investors are selling, but he insists supply is still outpaced by demand. To hit his number, Bitcoin needs to climb about 58% to reach the low end and 76% to hit the upper boundary. Now, for some perspective, it's only up 21% year to date, and Mooch, well, he doesn't see a problem, and he's not exactly on the sidelines either. He said he owns a lot of Bitcoin, both personally and through Skybridge, with 70% of his wealth tied up in the asset. In May, he even said Bitcoin won't be fully recognized as an asset class until it hits 500K, when it officially takes gold spot at the grown-up table. Meanwhile, analysts at Bernstein are singing from the same bullish hymnal. In a note this week, they said Bitcoin could run through 2026, snapping the 4-year cycle that saw 20K in 2017 and 68K in 2021. They see a peak between 150 and 200K 6 months to a year from now, with Trump's mission to make the U.S. the crypto capital of the world serving as rocket fuel. Now, spot ETFs and structural changes in the market, they say, make the old halving cycle rules outdated. Bernstein also sees an altcoin season kicking in, with ETH and Solana potentially leading the next leg. DeFi is back in focus, staking yields are scaling, altcoin treasuries are expanding alongside Bitcoin treasuries. Even Dogecoin and Cardano made their list, proving meme coins really are the cockroaches of crypto. And if that wasn't enough, they raised their price target for Robinhood stock from 105 to 160, citing its move into staking in crypto. The stock may have slipped 6% to 108 this past week, but it's nearly tripled from $38 earlier this year. So here's the takeaway. Scaramucci says 200K Bitcoin by December. Bernstein says 200K Bitcoin by 2026. Whether it's 4 months or 18 months, the consensus is clear. The top is not in, and the bull is still very much charging. We're bringing Brandon back. Brandon, the mooch says Bitcoin will be hit by 200K by this Christmas. Bernstein says the same number, but by sometime in 2026. Do these timelines even matter, or is the only real takeaway that everyone agrees we're still not at the top?
Yeah, no, I think that we're not at the top. We have a long way to go. The liquidity, I mean, again, reading, I don't know if you call it tea leaves or just what the administration is doing. The faucets are going to be turning on here at some point in order of magnitude. It's gone on much. I mean, even just the last couple of years, the rates being what they are have lasted much longer than I thought they could. But at some point, again, all this debt has to get refinanced. The average person is, again, we can look up all the stats we want about credit card debt and auto loans and all these different statistics. But at the end of the day, the chickens come home to roost. The Pied Piper's got to get paid here, and you have to, refinance all of this. The rates have to come down at some point. There's got to be more liquidity in the system because, hello, it's a debt-based system. The system only functions if there's more debt spraying into the system. So come hell or high water, that will end up happening. This is why Bitcoin will continue to go up, guaranteed, as people have said for years. Bitcoin is designed mathematically to go up forever because it is perfectly finite, and it's therefore the inverse of the currency printing. So that right there, and people wonder why people believe that Bitcoin will be the one to do it, is because it is perfectly finite. Everything else has some type of inflation rate to it, whether it's gold and silver, whether it's making more land in Dubai. There is some type of inflation rate. So Bitcoin will be the fastest horse because it's the only thing we know that's perfectly finite, has the staying power, the first mover advantage, all these different psychological reasons. And money is psychological at the end of the day. It's a psychological engine. So again, you be careful. We only make stronger what we put our time and energy into. Could you make more short-term fiat with the ETH or some other altcoin? Yeah, sure. But we just talked about the high frequency trading or some of these other things. Like, sure, have at it. If that's your thing, you want to go gamble on a, build your house on sand. It is what it is. Be careful what you put your time and energy into. So you only make things, you make things stronger and give more credence or power to something that you put your time and energy into. So be careful what it is you're putting time and energy into. Are you building that house on Bedrock, on the Bitcoin, first layer protocol, or are you building it on sand? All the meme coins, all the other stuff out there. So that to me is the biggest signal within the noise. And just, again, we talked about zooming out, kind of the theme of this, but you'll be hurt by what you know. They say you can't be hurt by what you don't know. That's totally false. You absolutely can and will be hurt by things that you don't know. So Bitcoin's perfectly finite. It'll suck in all the liquidity over a long enough time horizon. It will continue to eat away at everything over the course of time. And that's all the average person has to remember.
Yeah, and the two words that everybody was putting a lot of energy into last week were rate cuts. Jerome Powell came out. He alluded to the fact that we would likely be seeing rate cuts in the last quarter of this year. Now, in the wake of that news, we saw almost an immediate run up. I think Bitcoin surged like 4 or 5K within a matter of an hour. Everything was pumping. Now we've seen it pull back. Do you feel like the current idea of rate cuts happening in the last quarter of the year are already baked into the price right now? Or is this one of those rare instances where it's actually not buy the rumor, sell the news, but it's actually sell the rumor, and we're actually waiting to buy the news that these are officially going to happen? How do you think that's playing out right now? Are those already baked into the current price, or do you think we still have a long way to go with the announcement of impending rate cuts here at the end of 2025?
Yeah, that's a great question. And like we just talked about, money is psychological. So a lot of times it is, buy the rumor, sell the news. However, at the same time, I think what people discount to a degree or just don't think about, because it's invisible. It's not like, none of us can be anywhere, everywhere all the time, is a lot of the announcements that have gone on. You have price run-ups. It's what doubled, since Trump got elected, in essence. Bitcoin's gone up and doubled in price. And that, in saying all that, maybe a lot of that is the psychological aspect, and it's done some of its running up in that first kind of tranche. And then you have this area where a lot of these announcements, what's already happened, who can confirm all the announcements? We've had thousands really over the last year, probably, right? You can't even keep track of them all. And who is actually going into the market and buying that Bitcoin out of the market? What percentage of all those announcements have actually come to fruition yet, and actually is bidding those out of the market? Again, that price is made at the margin. So how much will run up at that point again? So when you hit these like second layers, and I think even Dr. Jeff Ross talks about this a lot too. He has like these 3 buckets, and then the final phase. So we're not even really in phase 2 yet, or we can't be sure. because we don't know who is actually buying at this point. Just because everyone's announced, again, that's phase one to me, where prices running up because people are announcing things by the rumor.
We got time for one more question, though. It's on the same subject of what we were talking about. We're getting all these big predictions. They're fun, right? We got Mooch's December prediction, Bernstein's 2026 prediction. The common theme of all of these, though, is that Bitcoin go higher. Do you think these loud, bullish prognostications help push Bitcoin adoption, or do they maybe set up some unrealistic expectations that could backfire if we were to see a big pullback?
Well, at the end of the day, humans are driven by fear and greed, right? And the greed aspect is very powerful. The fear part is probably more powerful. And so the number go up part of it is really probably one of the most important aspects. And it's how everyone comes in. I know there's a lot of people talk about, people come from the number go up and they stay for the freedom. And there's no other way, because at the end of the day, trying to educate people about, hey, this is money that can't be stolen from you, or hey, it's got 21 million, or can't be any more, and it's permissionless, trustless. I mean, most people are not going to gravitate to that. That's just not how humans think, they work. So the number go up aspect, just by the very fact that it is capped at 21 million, and it is finite, so therefore the more printing there is, ironically the price goes higher. That is a self-reinforcing loop, and that's how people come into this. And again, if you have Canadian trucker events or the Dutch farmers, or these bad black swan events happen, then yes, people are going to come in that way too, through fear, or wars are happening and then people are moving and walking to another country with their seed phrase in their head. Those are incredible stories, and those do orange pill people. But the quickest, fastest, easiest way really within the Western world is making people talk about Bitcoin all the time, and the number go up is that aspect that keeps it on people's lips. When you have Wall Street being outperformed and hedge fund managers all the time, year for year buy Bitcoin. Well, guess what? I mean, politics, wealth management, all these things are driven by culture. They're downstream from culture. And so culture is what demands this. And if the average person is seeing, hey, why do I keep losing against this Bitcoin thing? Or why is the price of Bitcoin keep going up? And you told me I didn't need this. Or, hey, politician, why aren't you advocating for this? Yeah, I heard over here that it could help. So the price of Bitcoin, I should say, is what is driving that sentiment and what wakes people up out of their stupor, quite honestly. And it wakes people up to saying, hey, I could have, because that's why, again, we talked about altcoins and the meme coins and all. That's why people jump into those. It's because I'm at the casino, I'm gambling, I might get a big win. Now that's a whole other story for a different day. A lot of people are addicted to losing and gambling and going to casino. That's why casinos are filled. But at the same time, end of the empire type sentiment, where you have people that are trying to go get a big payday because they can't afford their daily bills. So they're forced out the risk curve. So again, price is interlinked and intertwined as part of all that. And that's the biggest driver of people continually seeing that Bitcoin's price continues to go up, despite what the media says, despite what past administrations have said, despite what their uncle has said, despite what anyone has told you. Oh, by the way, this thing just keeps going up and it keeps eating your lunch, and you can't ignore it any longer. So I think it is very important, and that's why the Overton window being shaped by, again, this is kind of the theme of the show a little bit. Money is psychological. Inflation is psychological. Hyperinflation is psychological. So if you have people moving that Overton window and showing people the path and saying, hey, this is what's going to happen, well, it comes to fruition. You manifest it into existence. So we have the properties and we have the foundation of what it can actually withstand those predictions. Doesn't mean they're going to happen tomorrow, but they will over time, because the education, the narrative will then feed, again, the self-reinforcing loop. It feeds the price, and this will just continue as more people come in. They get more interested in Bitcoin. They get educated in Bitcoin. Will some people get wrecked? Of course. Many of us have got wrecked over the years, but then you get back up on the horse and you say, what did I do wrong? What happened? And those people are the ones that will continue to drive and be added to the group and push Bitcoin forward in the future.
Yeah, and I guess we shouldn't be surprised, right? Like, we live in this world of big media where headlines, it's all about the headlines, what grabs people's attention, and big numbers is the most effective way to get people's attention beyond anything else. But with that being said, we have great educators in the space like yourself that are teaching people Bitcoin is so much more than just number go up. It's about self-sovereignty, about protecting your wealth. For our audience in there, I'm sure we always have a couple people trickling in that are new to this space. What would you say are some of the most important benefits of Bitcoin outside of just big price action? What would like some of the big ones be in your opinion?
So the big ones for me were self-custody, truly, like understanding you can hold the keys to your Bitcoin and custody the asset in your mind. I mean, that was just unbelievable. That was literally mind-blowing for me, for lack of a better phrase. And that right there, coming from a real estate background and seeing, you don't own your real estate, your government owns it. And you see what happens if you don't pay your property taxes. And it's hard to get up and move to another country when my real estate is here, my home, my apartments, my rental properties, my self-storage complex. That's very hard. And is that a dystopian future in a way where you were thinking about those scenarios? Well, it is to a degree, except we just lived through the last 5 years. I mean, if you can't, again, zoom out, and that's where a lot of Bitcoiners nowadays are people that can zoom out very well. They see patterns very well. And we can see directionally we're going away of more authoritarian governments all across the world. So it's just people putting their stake in the ground and saying, hey, I know which direction we're going. It's just like the price of Bitcoin. I know which direction it's going, continues to go up, but it has to keep going up. That's kind of like governments. I mean, governments have to keep taking more power in a debt-based system. They have to keep taking more people's rights and et cetera, and doing things to take things from the people. Otherwise, you get too educated. You're too smart as to what's going on. This is why we see privacy under attack. When we see all these different things going on, it's because governments really, by just their inherent, just that by them existing, it's what the founding fathers of America knew. And this is why they tried to limit government so much, is because all of human history, it goes down the same exact path. And we're just repeating these things over and over and over again. So I think the custody aspect is probably the number one thing for me, where you can now, and it has so many ramifications. Now your government has to treat you better because they can't just go and steal your assets. Right. They have to negotiate with you. You can walk, to another country. You can, you're a safe, it defunds, again, people say it defunds war, but it's, why are war spots? Over energy, it's over resources, the gold, you name it, their oil. But if your money now is what you're storing is now in the ether, I can't just go beat you over the head and take your assets. And so now we have to fight on a different playing field. You can't literally be on the field anymore. You have to fight in a different realm. So anyway, all that being said, I think that the custody aspect is really, to me, the most important part, because it really wakes you up to realizing, well, this is the only thing I own. I don't own my life insurance. I don't own my stocks. I don't own my real estate. I don't really, maybe you can, maybe own your own business type of thing. You're still, again, linked to the government in the sense that, the IRS here in America, taxes, all these different things, right? You are attached to them. And Bitcoin is the one thing that they can't control, and they have to bend the knee to the people that have their Bitcoin in self-custody.
Mm-hmm. Absolutely. I mean, there's a lot of benefits to becoming part of this Bitcoin ecosystem, and we're seeing that more and more every day, but usually people are brought in by the big number, and then they were like, well, now I'm invested in this. I better do my research, when you should just do your research before you invest, and then you're going to feel a lot more confident with the plan you make going forward. As our main man, Luca, our chart wunderkind on the show, always says, you plan the trade, you don't trade the plan. Have a plan in place after doing your research, and then act on that plan. DCA out there, gang. Brandon, before we let you go today, we're starting this new thing, and you are in first test guinea pig subject, so I'm super excited. This is not financial advice, but with the way the winds are moving right now, what is your prediction? What do you think we will see Bitcoin at by the end of this year, the start of 2026? You have to give us a price. What would it be? We're going to keep track of everybody's prices going forward. We're putting them on a chart, and then we're going to revisit them at the end of the year and see how talented of prognosticators all of our friends of the program are out there. So based on everything you're seeing in the market right now, again, not financial advice for anyone out there, what do you think 2026, the beginning of 2026, what do you think Bitcoin's at?
Those are the time of year that things are always run, and things we have time for, this where we were talking about earlier, of institutions really finally getting their hands around it, being able to buy, prices made at the margin, and then, retail in it being, talking, literally being together and talking more. I think it's minimum 200,000 by the end of the year. I wouldn't be surprised if it's, 250, 300 even. But I think minimum 200,000, like Scaramucci said, basically. But I think there's just, I can't see a world where it's not, quite honestly. I should say I can see a world where it's not, but I think with all things being said and what we're all doing, or which way the world is going, I think it's going to be 200. And then the one thing I will say is I think that's going to be the cycles. We're going to have cycles, but I think they might be a little bit messed up from now on, I guess, if you will. So we can maybe extrapolate that on that more some other time, coming back on the show. But I think we're going to have elongated cycles. It's still humans, fear and greed. So we're still going to have the ups and the downs, but I think they just change over time. And I think that because of these institutions, because of these things happening, it just starts shifting and molding the cycles in a different way, if that makes sense. So I wouldn't say I would say 200 by the end of the year, but then next year I could easily see double that again, 400, 500,000, something like that. And then again, maybe it goes down a year or two from now, and we have this a dip, so that's where I think things are going. And again, as more people get educated, it's going to become very obvious to everyone, whether you're the top allocator in the world. You look at the Stan Druckenmillers, the Paul Tudor Jones, guys like that, all the way down to the average pleb. Like everyone comes to this in a different way, and we all realize it, have that come to Jesus moment, come to Bitcoin moment, and we all have that story.
Yeah, and we all buy Bitcoin at the price that we deserve, as they say. So I got you pegged for 200K by the end of the year. Do you want to go 201 and Price is Right it or anything? Or are you sitting at 200K? Because if you would, I'm making sure we get you a nice Patagonia.
You're right. No, you're right. Let's go 201. Let's do it. We're going to play some prices.
201. We got Brandon Gentile at 201 at the end of the year. Well, Brandon, I got to tell you, it's always an absolute pleasure having you on the show. We really thank you for joining us today. Before we let you go, though, I'm sure there's a bunch of people in our audience who are like, I like the cut of this guy's jib, and they want to see more of you and your content. Tell them the best place to go.
Just my name, Brandon_Gentile on Twitter, and Nostr as well, but mainly a lot of Twitter, a lot of Nostr, and then our YouTube show where we interview Bitcoiners, people in the freedom space, the sovereignty space, liberty, and that is the Playable Character Show. And again, that's Brandon_Gentile is the handle there as well, just my name of the YouTube channel. So look forward to seeing you guys there, and always have a blast. And I always have a blast coming on the show. So Hank, team, thanks guys, I appreciate it.
Thank you, Brandon. Always a pleasure. And everybody, please check out Brandon Gentile on YouTube X, one of the best educators in the business. So you're going to want to check out his stuff. Brandon, until next time, my friend, sayonara. Pleasure seeing you, and enjoy the rest of your week, bud.
Thanks, guys. Appreciate it. Have a good weekend.
Cheers. You too. All right, gang, that's a wrap for Monday's episode of the Blockchain Report. As always, if you haven't already, make sure to like, follow, and subscribe to RoxomTV and yours truly at Hank at RoxomTV on all platforms that matter. We'll be back tomorrow with more of our Bitcoin bedlam and crypto chaos. But again, remember, Tuesdays through Friday, we are on at 8 a.m. Pacific time. We only start at 10 a.m. on Mondays. So 8 a.m. tomorrow, we'll see you there, or be square.